afternoon, good evening, and welcome to another video of Diving Trader. My name is Daniel, and today, guys, we're talking about ChargePoint. ChargePoint is a stock that I've had in my radar for the last few months. In fact, if we go right back to November, which was the time I wanted to buy it, it was around about $37. So here's about $36, $37, which is where the time I wanted to buy this stock, and I decided not to. I decided to keep it on my radar, and ever since then we did see rises. We see boom, 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 and we came up to around about $46 max back in December. We've had some ups and downs, but still hasn't been too bad. And then we've had slow drops, slow drops, slow drops, and bang, right down to where we are today, which is the price I got in at $24. Under $30 for me would have been a bargain. So getting at 24 is even more of a bargain. So I'm quite happy about that. It did today go down to $22, which is a shame. I didn't get in there. I was working, so I couldn't have been buying that at that time. But it's still a good price. In fact, I've bought in, and I'll probably wait a little bit to see what happens tomorrow to see if we have a drop. So we'll look at the pre-market tomorrow to see how we react. If it drops down more, I'll be added in more. So yeah, I'm happy. Quite chuffed. It was like Christmas because I've been waiting for this for a while, and at $24, we can't go wrong. This that has first publicly traded EV charging network after it completed a 2.4 billion SPAC deal. The company operates the largest network of charging stations in the United States. So yeah, these guys are number one in their market. They're probably one of the best and really quite far ahead. They're increasing their charging points throughout the states. And those of you that want to get into the EV market and are not sure which EV brand, whether it be Tesla, whether it be NIO, this is pretty much a guaranteed no-brainer from my point of view, because the way the world is adapting to these electrical vehicles and the demand that will be needed for these charging points. We see very few, for example, in Europe at the moment. There's a lot more in the States. But we're going to see this on every garage, every petrol station, every highway, as they say in the States, more and more in the next seven years. So it's really quite promising. So Lucy is joining me today, my assistant. If you haven't already met her, let's see what she has to say. Lucy, are you there? What do you think?
The EV industry is getting increasingly crowded, with various manufacturers battling for market share. This is exactly what makes ChargePoint so attractive. The company is poised to make money no matter which manufacturer becomes the dominant player. So, ChargePoint's growth is proportional to EV penetration.
So the company had 115,000 charging stations available at the end of last year, but the company plans to increase that number to 2.5 million stations by 2025. So in terms of numbers, after the merger was completed, they have fuel to increase their expansion. So they actually raised $480 million, $480 million in net proceeds. Okay, so they'll have a lot of cash at hand to invest. So at the means, the ChargePoint starts trading with 650, so that gave them 1,650 million pounds in dollars, sorry, in cash. So which is a lot, which is great for moving forward. There are obstacles. There are obstacles that we have to be aware of. We've talked about the EV market, how there is help, but we have to see how the market grows, and that very much depends on supply and demand again. So we have many factors to consider, one of which is the semiconductors. We need to make sure that the semiconductor market gets itself sorted out. I mentioned that in one of my previous videos, my recent videos. You can have a look at that video on semiconductors and ETF on semiconductors. I mentioned that semiconductors were an issue at the moment, and there's a lot of companies such as Ford, GM, that are not being able to produce the cars they wanted. In fact, they've taken 1 million off because they don't have the chips to put in the electrical cars. So that's a bit of a worrying thing, and we're assuming or we're hoping that in the near future, or at least this year, I mean, this is something that needs to be done quickly because The chips do depend on a lot of a lot of devices, not only cars. But this is a mutual relationship in the sense that it has to go hand in hand. So the market, the EV market has to grow in order for this to grow. Okay, we also have to look at pricing. If you imagine that we get into a recession again, and you're looking at an electrical car that's not going to lower less than $40,000, for example. There's a lot of people that can't afford that car, so it all sounds good that they can produce these cars, but will people be able to afford the car in the future? This is something we need to think about. So uh, there will be a market. There definitely is a market, but regardless of what we, how we want to invest, you need to sort of take these into consideration. So we could have some hiccups or some bumps, should we say, in the future. So if you're looking at the next 2 or 3 years to get quick money on this, I would say hold that a little bit longer than 2 or 3 years, because this is at least a 7 year, at least 5, 6, 7 year hold to get a real good return on this. So as we see, as mentioned before, their growth is directly proportional to the EV penetration in the market. We can see back here, this horrible virus back in March sort of dented it slightly, but we're looking at having real exponential growth around about 2022, 2023 is when we will really see the hit of this going even further than it is going at the moment. This is a little bit about where they've come from, where they're going. So look, moving forward, they want to accelerate new products. They want to invest incrementally in marketing and sales, fund more CPaaS, commercial and fleet, expand European footprint, and enable strategic acquisitions. Okay. Uh, so as mentioned, they sell hardware, software, and services as well. So it's a package. So they have their charging stations, they have their software or SaaS, and then they have like an annual subscription, parts and labor warranty that comes again as a bundle. Okay, or you can have this all as a bundle, or you can have it separately. Okay, so these are the sort of the things that they're offering. So this is quite interesting bit of statistics. 62% of Fortune Top 50 use ChargePoint currently. Now, this is what the part that interests me most, and this is always what we want to look at as an investor: market share. Market share is important. There's less competition out there. I won't say there's lots of competition, but there is competition, but they are so far ahead. This is probably like the Tesla of charging stations in the US. Well, I say in the US, they're branded in number one in America, and they're expanding rapidly into Europe. So there's no doubt that in Europe, soon they will become number one. So yeah, if you have a look at the competition, they actually have 7 times more market share to their second next competition. So they have 73%, and you have Semiconductor, which is the next one, at 10%. Blink which is another good company, have 8%. Yellow is the EV Connect, and then Shell, and then Volta. So yeah, so they really do have the monopoly, and they're really quite advanced there. So this sort of this is good. So they're operating in 16 European markets, partnerships with energy retailers and leasing solution providers, over 133,000 ports accessible via roaming integrations. So let's have a look at what they have in terms of the structure. So PIPE investors 7.4%, which is quite a large amount. SBE investors 10.3%, founders shares 2%, and the existing SharePoint shareholders of 80.4%. Okay, so yeah, so the cash sources, Switchback has around about 370 million cash held in the trust account and a pipe size of 225 million. So they're heavily backed. This is good. And valuation of 2.4 billion with strong balance sheet, attractive evaluations versus EV ecosystem. Plus a capital structure of 650 million in cash on balance sheet, assuming no redemptions, to fund growth and expansion. Okay, so yeah. So guys, that's a little bit of a review on the company. I'm excited for this, and I'm happy that, like as I mentioned, I got it in this price. Guys, I want to hear your comments. Please give me some comments down below. Have you invested in this company, or are you planning to invest in this company? Have you bought this company? What price did you get in at? I'd like to hear your comments down below, guys. Guys, if you like this video, please give me a big thumbs up, and if you haven't subscribed already, please hit that subscribe button. That really helps the YouTube algorithm, helps my channel to grow. So I really, really appreciate that. Guys, thank you very much for watching. I hope you have a great evening and speak to you soon. Bye bye now.